Welcome to Fun with Annuities with your host, me, Stan the Annuity Man, America's annuity agent. Can annuities be fun? Can contractual guarantees be fun? Absolutely they can. Find out the brutal facts about annuities with no sales pitches or high-pressure nonsense. Just the brutal and factual annuity truth, which is all you need to hear. Let's have some fun with annuities, and let's have that fun start right now. Welcome to Fun with Annuities. My name is Stan, the Annuity Man, America's annuity agent, licensed in all 50 states. I'm so glad you're here today because, as you know, with the previous 50 podcasts, I'm just riffing it, man. I'm going 100 miles an hour. It's just me. But we're having our first guest, and he's going to be on a lot. And this all happened. We're talking on the phone. He's a very good friend of mine. And, we're talking about Bitcoin and cryptocurrency and blockchain and those type of things. And the reason I called him to explain it to me in English so that Stan could understand it. And he did. And I'm like, you know what? I need you on the podcast. So let me give you a little bit of background of who he is and how we know each other, full disclosure. And then I'm going to let him tell you a little bit about who he is and his firm. And then we're going to jump in. So his name is Owen Schrum, and he is the founder and owner of Shrum Private Wealth Management. And all of his contact information is going to be on the site. So I'm not going to sit here and repeat it. And I mean, some of you are driving, some of you are on treadmills, whatever. Okay, listen to the podcast. It's going to be on my site. Just go to theannuityman.com. So Owen and I worked together. We worked together at Dean Witter, and then Dean Witter was purchased by Morgan Stanley, as they say, but Morgan Stanley. And so we were partners. He taught me everything I know about the markets, and I'm not kidding with that. That's not an understatement. He is someone I trust. He's someone you can trust. He's forgotten more than most people ever know about the market, and that's not a joke. And we're good friends because we're both from North Carolina originally. I'm wearing the University of North Carolina blue hat right now, in honor of we're big basketball fans. And he owes me for life because I got him a signed autograph picture, personalized from Dean Smith before Dean Smith, the historic basketball coach of North Carolina, passed away. So with that being said, Owen, give us the background of Shrum Private Wealth Management. Make sure to tell them that you went to Chapel Hill and what you majored in. I'll let you go.
All righty. I'm in another life about 4,000 years ago. I was a chemical engineer and made my way into one of the training programs in Wall Street. And 35 years later, we're here. Now, the background for our company is this. After Stan and I worked on what was called the wirehouses. Wirehouses in the day were the Wall Street firms, the Merrill Lynches, the Morgan Stanleys, the Payne Webbers, and 1,000 other names that have been disappeared and taken over by banks. But so we worked in the wirehouses forever. And after seeing the things they did to customers, in our opinion, and I think Stan, the Annuity Man, would agree with this, sales contest, in-house products, non-disclosure. They weren't doing the job for clients that we thought was right. So we weren't going to change it. So I started my own company to do it right. That company is Shrum Private Wealth Management. We do investment planning and investment management and planning on a fiduciary-based, a legal fiduciary standard of taking care of clients' interests first, and on a fee-based basis, no commissions. So our background is we do investment management, we do advanced planning for clients and everyday people just like you. And with 35 years in the business, it means one, we're old, I'm old, and two, I've seen it all. And I've seen the mistakes, and we can guide people from making those same mistakes. That's my story, Stan.
And that's a good one. And the only reason that Owen and I aren't still working together, I went through some personal issues and some family issues a long time ago, which he, as the best friend I have, probably helped me through that. And we just, at that point in time, he was doing his own thing, and I just needed to take some time off. But we still talk all the time, and I'm so glad he's here. So let's jump into the topic. People are very interested in Bitcoin and cryptocurrencies and what you explained to me, blockchain. I don't know what order you want to go in because they're all somewhat intertwined, but I'll just let you have the floor, and you can choose where you want to start, whether it's Bitcoin, the overall cryptocurrency market that includes Bitcoin, and then my favorite topic that you talk about is blockchain, because you can explain it to people like I've never heard it. And this is, we're not going to talk about annuities, people. I mean, we might delve into the question of, are annuities going to be crypto in the future, but that's later in the program. But I really want this to be educational for my listeners. So Owen, jump in, and I don't know where you want to start, but go ahead and start.
I've thought about it. I want to do it a bit different. Let's go back in time. Let's lay a basis. 10,000 years ago, two people wanted to trade. I had an apple. You needed an apple. We did a transaction. I gave you an apple. It was Stan and Owen doing a transaction with an asset involved. Right. Later on, that didn't work, though, if someone wanted to trade an apple for pieces of a cow. You needed currency. So things like gold coins evolved, bronze coins, diamonds. So those were money. Those were currency. And we would trade goods for gold coins. Later on, from Roman times before that to the pharaohs, they decided, as the king, I'll issue kingdom-oriented coins. They don't necessarily gold, but they were coins backed by a king or a pharaoh. And that was the first currency because there wasn't value behind it. There was a promise of a central government. So that's where we've evolved to today. If money is essentially a fiat currency that is issued, it doesn't really have value. No one's on a gold standard anymore. But it is backed by a central government or a central bank to guarantee its trust. So let's go back now, nearer term, 2006, 2007, 2008. The banks are collapsing. And there were people saying, if I want to do a transaction, why do I have to go to a bank? So anyone here, or you've ever gone overseas, just to go get a foreign currency, they want 10% to turn it into euros and 10% to turn that euro back. The banks are expensive transactions, and quite frankly, not everybody in the world and third world countries even have banks. So an anonymous person, Sakamoto, wrote a paper. It really wasn't a real person. He wanted to keep his anonymity. What if there's a currency that's digital, that's online, that is not using an intermediary like a bank to do the transaction, so there's no frictional costs, there's nobody in the middle to take a cut. And that was the idea of cryptocurrency. The very first one was Bitcoin. But let me say something that's kind of important to understand on a basic level. Bitcoin is not, we're from the South. In the South, you'd say, I want a Band-Aid, I want a Coca-Cola. But you meant you want a soft drink, or but you use those things. Bitcoin is synonymous with digital currency, but it's really called cryptocurrency. And what that means is the whole currency's reason to be is that it is set up digitally with cryptography, meaning cryptography is a simple code between two parties that's private, like they used to use in the code busters in World War II with the Navajos.
Right.
So that's cryptocurrency. Bitcoin's the most famous, but by no means is it the only one.
And there's numerous. If you go to Market Watch or somewhere, you can pull up the cryptocurrency. There's many types. It's interesting. It's interesting how this has grown. And I saw just this morning some analysts said that they're giving some $90,000 type target on all this. The interesting part about Bitcoin and cryptocurrency to me is just that people are investing in it without knowing really what it is. I'll guarantee you there are people on this podcast that invested in Bitcoin and you've probably told them some things that they don't know. But in my opinion, as I told you when we discussed this, when I was driving down the road, it's hard for me to believe that the United States government, Goldman Sachs, JP Morgan, Wells Fargo, Citibank, Chase, all the big banks aren't going to be involved in this at the end of the day, just because there's money there in it. It's trackable, which you're getting ready to explain on the blockchain side of it. What's your opinion on the government and the big banks at the end of the day being the winners with cryptocurrency?
Well, before I answer that, I'm going to tell you what it is first, because that
Okay.
helps explain the answer to the listeners here.
Good.
Bitcoin, quite simply, is a share. Bitcoin is a online digital currency. That's what they want to say it is, a currency that's through a secure system run by a massive, decentralized computer system. Tens of thousands, hundreds of thousands of people in a computer system, all linked together like the original internet, Stan, like the original internet. And all Bitcoin is one person has a password on steroids. It's called a private key. Then there's a password on the decentralized computer system that all these 10,000 people have, and that's the public key. All Bitcoin is two keys somewhere and someone deciding there's a value to it. So to me right now, listen, the definition is it a currency? In my opinion, it is a speculation tool, an investment if you want, but a very speculative one that is an investment in a new technology called blockchain. It's a new digital system.
Which leads us to the most important part of this podcast, in my opinion, is explaining to people blockchain as how it works, why it works with cryptocurrency, which includes Bitcoin, and then how it benefits us in other areas that people probably aren't even thinking about, because it's not about Bitcoin. It's really not about cryptocurrency. I think cryptocurrency, and I think you would agree, eventually some form or fashion of it's going to be there. It's going to be used. It's always going to be, it's never going away. Okay. But blockchain, which is the underlying foundation of it all, is the real value proposition for people, not only from an investment standpoint, but from a lifestyle or life standpoint. Am I right about that?
Absolutely. There are people who think blockchain is the new internet. And actually, blockchain is the internet of things, the internet of assets, the internet of things. So let's explain blockchain on a basic level, understanding that at a computer level, it takes people speaking a far different language than us to make it work. But on a basic level, here's what blockchain is. Remember in the old days, you had ledgers? Mm-hmm. Ledger was nothing but an old-timey way of keeping up with accounts. It was a book where people made journal entries. Someone made a credit, someone made a debit, and you wrote it down on this ledger, and that's that. And picture the old banker with the shades writing down notes in a book, deposits, right? Like if we're old, like we used to do the old Christmas savings books.
Exactly.
That's what a ledger is. Today, ledgers have been replaced by spreadsheets. A great example of a spreadsheet is QuickBooks that businesses use.
Right.
That is a ledger, though. That's an online ledger. Now, blockchain is a shared, picture this. You have a ledger. It's yours. There's a book. You see it. Picture online 100,000, 100 million people. Pick the number. Have this same ledger. They all can see the same thing. And the way that works, the definition of it is that it is a shared, decentralized ledger for recording transactions and assets.
Okay. Give us some examples of how that's working outside of crypto, and then come back and talk about, or you can talk about how it's used with crypto and cryptocurrency, and then come back and talk about how it's used in other applications.
I'm going to do an application, not crypto first, because it really makes it understand how crypto will work after that. Okay, Stan. So here's an application. Now the blockchain data is stored in blocks. Blockchain means you got a series of data called blocks that two parties agree upon. Private, public, they agree. Once it goes into the blockchain, once that block goes into this worldwide ledger, it can never be changed. It's there. So it can't be hacked. It can't be changed. It can't be made fraudulent. So it's there. and two parties agree upon, and the next block builds upon that. Think of a case where you go see a doctor and he gives you a blood pressure medicine. And you go to the next doctor and you break your leg and they give you a pain pill. Then you go to your next doctor for your heart medicine. You go to another. None of those doctors are ever talking to each other. How many overdoses?
Well, they ask you to fill out the form, but none of us can remember what it is. And if it's an emergency situation, you can't fill out the form because you can't fill out, you're in an emergency. So what you're telling me is they can access it all because it's in the blockchain.
Okay. Blockchains, remember the blockchain, my definition is it's a shared worldwide ledger that everybody looks at. So you go to the doctor, you and your doctor sign an agreement, that block of information, remember block, goes into blockchain. It's there for everyone to see that's given permission. You go see another doctor. He puts that new medicine in there on the next chain. Remember, they're linked, caught like a chain. So another block of information, the next chain. You then have a car wreck. You're rushed to an emergency room in Sheridan, Wyoming. And nobody knows who you are. That's and right. The doctor looks on blockchain. This person has a heart issue. He's on blood pressure medicine. He's on blood thinner. He knows everything about your medicine just by looking at the blockchain. So everybody in the world can see what's going on in any kinds of transactions, be it banking, buying and selling used cars. You can tell who's owned that car 5 people back.
You can buy life insurance in a day?
You can buy life insurance in a day because your medical records are all on blockchain. Right. They don't have to send a nurse to your office. So blockchain is shared worldwide, like the internet, but it's data that's shared for users to see.
So criminals want to go in there and change it. Tell me why they can't, or bad people, why can't they change it, Owen? Why can't blockchain be taken advantage of to, and hurt the consumer? Why can't that happen?
Every block of information has something called a hash, and it's a long series of numbers. Once it goes in there, it can't be changed. If something's wrong, it can't be changed. If something needs to be changed about it, what you do is you have to enter a new code with a new block of data to change it. And before long, Stan, you've got hundreds of millions of 250 code messages of hash chains that you have to change them all the way back through the entire blockchain. And then on top of it, you got, the way it works is you've got tens of thousands, if not hundreds of thousands of people on this network. They're called nodes, N-O-D-E-S, and they do calculations to when something goes in to verify it. And if something happened fraudulently, they're caught by ones of these 100,000.
And what happens when they're caught?
It kicks it out and it stops it. It's not allowed to happen. In blockchain, someone has to verify it. Remember the public and private key? Some user in the blockchain has to verify this information is correct through a super complicated mathematical equation, an algorithm if you want, and then people have to verify that information is correct.
Which leads us to kind of the basic question, which maybe we should have started with, which is, what is a cryptocurrency? And this, let's just use Bitcoin as an example because it's one of many. How is a Bitcoin made? Where did they come from?
A Bitcoin is a digital message. There's a blockchain. A company creates a block network. All these users have these complicated codes and they run these super complicated calculations. They're called Bitcoin miners, M-I-N-E-R-S, not O-R-S. Mm-hmm. And these miners run calculations, and if they figure out your private key, they verify the transaction, but they get a Bitcoin. The point is they can just be created. It's like they can be created. Anyone can start a network.
Is that good or bad?
If the concept that it's good because you don't have to have a central bank to create it, to me, the concept is, why can't you just keep creating them?
Yeah, and so the kind of like what we're doing now, Owen, with the printing of money, right?
That's exactly right.
So the valuation, if we're continuing to create them, obviously, if you have more, it's gonna be worth less, maybe.
Well,
Rationally.
Bitcoin says they're limiting their Bitcoins at 30 million, a certain number, but then comes Ethereum, and then comes Coinbase. There's no limit as to how many new networks can be started. So essentially, all Bitcoin's value is two people agreeing upon trading and how much the value is.
Which leads us to tulip bulbs.
Exactly.
Because tulip bulbs, for the people that have some financial knowledge of history knowledge, back in the day, in the Netherlands, I guess, those were commodity. Those were traded. Tulip bulbs were worth thousands and thousands of dollars. And every time I see a Bitcoin or cryptocurrency valuation that I'm like, wow, that's really high, in my opinion, I think of tulip bulbs. What am I missing here? It just seems like there's a missing piece to all this.
I started this off by saying, in my opinion, and let me preface, in my opinion.
Absolutely.
And
we're not experts in this. We're just, you know what we are? We're pragmatic realists.
But I have to admit, I took this from someone I saw at a financial conference who said, Bitcoin is a speculation in a blockchain network. It's not. He said, think about it. So everyone's saying this is a new currency. It's going to replace money. So you say you want to get paid in Bitcoin. Bitcoin came out in January of 2021, and it was 36,000. 4 days later, it was priced at 31,000. It loses its value 13% in 2 or 3 days. Who's ever going to take their salary and take their currency that can fluctuate 10% at a time? I don't believe that's going to happen until something is done, be it either government regulation or private regulation, that makes it a more stable, valued digital entity.
And when I'm assuming we're headed in that direction, just because it seems logical that cryptocurrency, whatever is going to be the final version, or there's going to be multiple versions, but whatever our government can get their greedy little hands on and control. I mean, what's the end game, and how long do you think, guessing, obviously with calculated guess, how long until the public truly accepts it, it's regulated to the point that people feel comfortable with, and the volatility is taken out? And that's a big question, but what's your opinion on that?
Some people say it's going to be a fad and it'll go away in 5 years.
I don't believe that. Do you?
No, I don't.
I don't either.
I don't. But it's funny you mentioned today, I'm watching CNBC, and they had the Securities and Exchange Commission, former Commissioner Jay Clayton on. Mm-hmm. He made an interesting comment this morning. This is the Securities and Exchange Commission. He said, Bitcoin will have to end up being regulated both in the United States and internationally, both directly and indirectly, either through direct regulation or by regulating how it's accepted and how it's taxed, quote unquote. Because
it's kind of the wild, wild west right now. Obviously, criminals, the black market, the mafias of the world, the organized crime rings. This is a no-brainer for them. They don't care about the volatility. All they care about is it's not trackable and traceable at this point in time. Or is it?
It is right now. It's so complicated to trace. It is essentially non-traceable. That's the beauty of the good or the bad thing is the blockchain technology that we talked about is so good. Bitcoin, cryptocurrency, is just one little bitty part of blockchain, but blockchain is everything. There is no cryptocurrency without a blockchain. It is that good. Now, Bitcoin can be hacked and has been hacked. It also can be lost. I mean, give
an example of loss, because I'm like, what? How do you lose it? Well, first of all, you can't touch a Bitcoin, but how do you lose it? Give an example of how that's happened.
Remember what I said, Bitcoin is nothing more than a private key and a public key. And I'm asking you and your listeners to think of a public and private key is nothing more than a really, really sophisticated password, a password on steroids. So you have a Bitcoin. What you have is a private key, your password. If you lose that private key, your money is gone. There's no, which I've lost my, I forgot.
That sounds like something that would happen to me.
So there's a case right now of someone who had $10 million in Bitcoin.
Oh my.
He lost his private key.
Oh my.
He typed it, and you only get 10 tries if I'm not mistaken. And he was on his 9th. And the next time he got it wrong, it shut it down, and
you lose it. But where does it go? It just goes. It's done. It's poof.
Remember, I said it's 2 passwords on a digital network.
So if the other password doesn't exist, it doesn't exist.
It doesn't. They estimate that 20% of all Bitcoin has been lost permanently that was issued.
Yeah, that's got to be cleaned up a little bit. Kind of a broader question, and I want your opinion on this. I know my listeners are going to want to hear this. Okay, sounds interesting. I get it. What's going to happen to the dollar, the hard paper dollar that me and you grew up with and everyone else out here grew up with? Where's that headed?
Whether it be by cryptocurrency or by credit card or by smartphones, while it won't disappear, the importance of the dollar for transactions is going to be minimized and diminished year after year after year.
And you're talking about the paper dollar, the coins, the hard coins, the
dollar as a currency will not disappear.
No, but me going to the store with $100 bill, it seems fleeting. Actually, for me, I use cash, and sometimes I try to use cash, and people are like, well, we don't take cash, especially in the COVID times. But I think that's going to trend even more to where people don't take cash.
Now let's together as a universe of listeners and you and I think about another scenario. We've discussed how good blockchain is, and Bitcoin exists to cut out the banks and be able to use blockchain for it. But there's all these issues we've talked about. But what if we could cut out the banks and the credit cards by using the dollar on a blockchain? In other words, we're not necessarily using Bitcoin, but you allow currency to evolve so that it can be transacted. Case in point, here's a real problem in the third world, particularly Africa. I mean, they're trying to grow, and we're trying to industrialize to increase the quality of the life of people in Africa. They don't have banks. Most of them don't have credit cards. It's hard, even when the World Bank wants to fund a smart young business in, say, Kenya, they have a hard time getting them the money and it not being confiscated. So that's where blockchain comes in. You credit, the World Bank credits a Kenyan small business $1 million loan on blockchain. He then can go down and go and receive it in Kenya without a bank taking 10% of it, or a payday lender, or someone stealing it. So imagine current legitimate financial transactions evolving from the credit card companies and from Western Union and from Chase and Citicorp to the blockchain. And therein lies the application.
There you go.
Cryptocurrency, in my opinion, it won't be cryptocurrency. It'll be currency, and it will evolve through the blockchain to doing financial transactions, including insurance, including stocks, including bonds, including currency, through this blockchain technology.
Which leads to the one annuity question of this whole podcast on the #1 annuity podcast on the planet, Fun with Annuities. Annuities with cryptocurrency internal. What am I missing? I get calls like this occasionally. I'm like, come on, man. I don't know. Let me ask Owen. But I'm asking Owen now. Tell me about that in the future.
Well, so happened I read a white paper by none other than the State of Florida Insurance Commission.
Okay.
And here's what and they're continuing ed. You'll probably have to read this when you do your continuing ed.
Oh, no.
Where they are envisioning Bitcoin, but more importantly, blockchain being used is, think about people that insurers don't want to insure. Someone with a rare disease, they can't get life insurance, or someone that is in a flood zone, someone who has a hard time getting insurance and it's really expensive. 10 rich investors could go over here and create an insurance pool, which is sort of what Lloyd's of London does in a physical room.
Okay.
They can create a pool of money and insure for a profit these high-risk people who need a risk deferral event, needs insurance.
Or lifetime income.
Or lifetime income. And they're essentially cutting out the insurance company by creating a private insurance pool.
Wow. I love it. I love it. Even if it, in the future puts me out of business, if it's pro customer, I love it, because it is as many middlemen as you can cut out.
Absolutely.
And still get the right product. I mean, the better. So let me ask you a question from the standpoint, and I know, you can contact Owen, his website is schrumpw.com. You can go to my site and you can get there, but you can contact Owen for specific recommendations, things like that. He can't do that on this podcast, but I want him to give more of a broad answer from the standpoint of how he looks at these as investments.
Okay.
So someone comes to you and says, "Hey, Owen, should I invest in Bitcoin or blockchain? Tell me your answer."
I would recommend people invest in companies that are advancing and specializing in blockchain management and the natural organization of their business, of which there are many large companies who are really investing heavily in blockchain. That is a technology that is not going away. To answer your question for Bitcoin, I can't be very specific because everyone's different. Sure. But I'll answer it like anything else. Any asset can go from 419 to 60,000 and back to 36,000. And it's a very speculative investment that you could lose your money very quickly.
And that's not, Owen's a pro. He's a pro at risk management, spotting trends. I mean, that's what he does. The reason he's doing it for so long, it has such a huge client base. But I'm assuming there's companies out there that are embracing the blockchain technology and trying to make that, I'm going to say switch, but changing their business model. And then there's some companies that are ignoring it, correct?
There are companies that all of your listeners probably know who are specializing now in setting up giant divisions to consult and develop blockchain business as a consultant for everything from shipping to railroads to computers to healthcare.
And I'm assuming you're doing your due diligence and your team's doing the research on this so that your clients can be positioned for this move that no one can time, but it's eventual, correct?
That is correct. It is eventual, in my opinion.
Yeah, and which that's the reason it's not a cliche when people say true investing is long term. A lot of the traders and the Bitcoin traders and all that, they get a lot of publicity because it's sexy and it's good fodder for the news organizations. But approaching it from a standpoint of my clients that are looking at non-annuity investments and non-annuity opportunities, I'm hoping that this has opened some eyes to at least people digging in, maybe going to your site and signing up for your alerts and your information to understand better blockchain, and obviously having someone like yourself, get in the weeds and get in the mud for them to find out what's the opportunity, and what's not the opportunity. But my fear with all of this from the standpoint of, I don't know if it's the words fear. I'm not a pro-government guy. You're not either, but government is essential at some levels. But if there was ever a case where I might lean toward pro-government a little bit, is in the overall regulation of cryptocurrency. Blockchain, as you said, doesn't need to be regulated because it's self-regulating, right?
That's correct. It's a technology. It's not a trading.
Right. It regulates itself. It's a technology. But the cryptocurrency side, whether it's Bitcoin or whatever you want to name it, whatever the government names theirs, if they do something like that, that's the fear. And I don't know what the time frame is for that. Give me some insight on what you're seeing and what you're hearing from your connections on how fast we're going toward a moment in time where the regular investor will feel comfortable to at least dip their toes in. I'm not talking about traders. I'm talking about real people, my clients.
A big national firm just said they're going to start offering, Goldman Sachs, several JP Morgan, several of the big banks are going to start offering cryptocurrency as a product offering. And some people will say, well, that validates it. What I think it does, those companies have risk management procedures in place.
Right.
So the more they get involved, the more it becomes regulated, is not the right word, but rules of engagement. They're not going to, case in point, one of the things cryptocurrency is used for, unfortunately, is moving money for terrorists and drugs. All these banks that are now get involved have strict money laundering procedures. So what's going to happen is, remember what the SEC chairman said, direct and indirect regulation? Direct regulation is saying it's got to go through the government. Indirect regulation says we're going to make sure the banks that deal with it have to play by the rules. And
if they don't, we're going to fine the heck out of them.
Or shut them down.
Money
laundering, they'll put in jail.
Right. So, yeah, the indirect, I have more faith in the indirect than I do the direct.
I do too.
The indirect, having been, where you're at now, I mean, the compliance is suffocating. And that's a good thing if you're a consumer. It's a bad thing if you're getting suffocated and having to do all these things to remain in business. But that's interesting. It's not like Goldman Sachs and JP Morgan's validating the category. They're not.
No.
Because they're just not. What they're doing, and you're saying, is they're applying the rules and regulations in place toward the cryptocurrencies now that they're involved. That's never been applied. And once they're applied, things will get cleaned up, correct?
Yeah, that is correct. That is correct. There's no way the world is going to allow this financial network of cryptocurrency to continue to fund terrorism in particular. I mean, you've seen some high profile, today the big deal, I forget which country it is in Africa, they kidnap all the school kids and they demand payment in cryptocurrency.
Right.
You heard that.
Right.
And that's going to stop. That's just going to stop.
Well, and I read one the other day where there's, I think, a South Korean businessman had multiple millions of dollars of crypto, or made a bunch in cryptocurrency, and obviously got noticed in the papers and things like that. Next thing you know, next day, organized crime people in his home have guns to his head and puts a computer in front of him and say, hey, that's fantastic, could you please wire it all? He had to wire it all or else he dies. What you're saying is that's getting ready to be wiped out sooner than later because real players are getting involved.
You and I both know when the greatest way to normalcy is when something becomes standard uses, rules will start applying that apply to ordinary business and financial transactions. So that's why I believe indirect regulation, if cryptocurrency is to survive and is to be used worldwide on a routine basis, it will be indirect regulation that makes it a more acceptable financial asset class.
It sounds like to me that the blockchain technology is legit, it's here to stay, and it's solid.
It is.
Is cryptocurrency that uses blockchain, that couldn't exist without blockchain?
Correct.
Is that the only application using blockchain that needs to be reeled in and is kind of the wild, wild west? I would assume so, just because it's money. Am I right?
That is correct. Blockchain, Bitcoin is the most famous application. it is captured, as you said, the two, it has captured the public's fascination.
Right.
The more ordinary and mundane things. We talked about annuities, but insurance companies right now are working with the blockchain significantly for claims processing.
Makes total sense. Or in the annuity world or life insurance world, blockchain would help with listed beneficiaries of the policy,
Exactly.
et cetera. All of the continuation. And if I'm in government, and I'm not, I should run for Senate, Owen, but that's a whole nother story. But I mean, the government wants a part of this, and they want blockchain to reel in the technology and the protocols with the real players to reel in crypto, because boy, from a taxation standpoint, black market's going to be tough. It's going to be straight barter at that point. You're not going to be able to exchange. I guess you could exchange old dollar bills, but crypto, no, right? And wouldn't this be like a tax? I mean, for the IRS, this is. I mean, they're running up and down the hall with blockchain T-shirts on, right?
Right. The IRS is still trying. The IRS, by the way, is because of the pandemic and people, the IRS is still trying to process 2 years of tax claims. They haven't even started thinking about blockchain yet, unfortunately. The IRS is backed up a bit right now, but they are starting to issue, to my understanding, some rules as they understand cryptocurrency, and they're onerous and they're complicated. And I tried to look through some of them, and it's the rules are being made as we speak.
Oh my gosh! I just had a brain aneurysm. No offense to people who had brain aneurysms. Capital gains on Bitcoin. What? I mean, this is IRS. I mean, tell me about that.
The rules are still being written, and I'm going to be very honest with the readers. I don't understand them as they're being written right now.
And we're not tax lawyers, and we don't give tax advice. But I mean, I can see the messiness of that. But I do think the end winner will be the IRS and the governments, plural, because of countries, collecting taxes, because it's going to be an efficient way to collect taxes.
Correct. And correct.
So it's amazing to me in typical government IRS form that they're trying to process tax forms, which really they should be focusing on this. But I guess they're going to be the winner anyway. So they're saying, well, we'll just let everyone else figure it out, because at the end of the day, they're going to get more money and more tax revenue, because you're not going to be able to hide it. And in the future, if we do go to a cryptocurrency basis, then taxes would be paid immediately from your account.
Exactly. And I want to be fair. I never thought I'd be in a position to defend the IRS, but here they've had a tough go with it, because if you think they came out with PPP, they've come out with all this employee assistance. How are people being? They don't even have the rules from Congress on how they're going to treat unemployment benefits or forgiveness of PPP loans, and they're all trying to work from home because they can't go into their offices.
It's a nightmare.
They're working around the clock to process things. I want to
totally agree with that. I had there's a situation in the annuity world where Vanguard got out of the annuity business and Transamerica took over all the administrative. And it's not Transamerica's fault. I mean, they got hit with a perfect storm of COVID and no one in the centralized office. It's the same thing with the IRS. I totally agree with that. But they're going to be the winners. And I do think that the governments, plural, and let's just talk about our government, they might have poo-pooed this early, but if they're thinking broadly, this is a win. This is a win and that's what scares people too, Owen. What scares them is the government getting involved and just kind of the big brother thing. But what you're really saying is blockchain's here to stay. You might want to at least accept it, and at a minimum, look at it as an alternative thought from an investment standpoint, right?
Well, I'm saying blockchain has to be distinguished and differentiated from Bitcoin and cryptocurrency. Blockchain is the internet. Internet gambling is not the internet. FanDuel, and I was going to say some other things that you can get on the internet.
Right.
That's not the internet. The internet is the pipes and tubes that bring it all into your homes. What you put on the internet is different.
Correct.
Blockchain is the internet. Bitcoin is the application running on blockchain.
Interesting. What we're going to do with Owen, and he's going to be on a lot with us, is we're going to take topics like this, because we didn't really talk about markets and interest rates and all the stuff that people call about. But I thought this was a good way to get involved with Owen, because I wanted you to see how he thinks, and how he thinks from a 30,000 foot view, and then he can take the plane down and get low and go into the weeds and think details. But this has been fascinating. As I told you, when I was driving the car and I said, we have to do this. And you're really the impetus for guests going to start coming on this podcast, Fun with Annuities. But boy, there's a filtering system. You got to be really, really good. And I think the listeners can agree that Owen's got some talent here, and he knows what he's talking about. But he is a dear friend, and that's the first and foremost. I've watched his kids grow up. He's watched my kids grow up. We've watched each other get very, very old looking, even though we both think that we're young. Even though we both think we can shoot free throws better than most people.
You still can.
Exactly. But I just wanted to thank you for being on. Like I said to the listeners earlier, I'll have all his information on the site. You can go there, you can contact him, and he's just like me. He's not going to go into some sales pitch nonsense. We listen, we see if it fits. We'll tell you the truth brutally. I think the older we get, I think you can agree, and the older we get, we just go to the truth first. We don't beat around the bush. And I think most of my listeners and clients like that about kind of my approach, and that's the reason you're on with me. So I'm going to let you go back and do your blockchain research, Mr. Schrum. Again, one more time. It's SCHRUMPW.com.
I enjoyed it. I
really. Shrum Private Wealth Management. This will not be the last time you hear Owen's silky smooth Southern voice. But thanks for being here, and thanks everybody for joining me on the #1 annuity podcast on the planet. And it just happens to be called Fun with Annuities, where our saying is, live in the reality, not the dream. Thanks for listening to Fun with Annuities. Please hit the subscribe button and make sure to go to my site at theannuityman.com, where you can run your own SPIA, DIA, and QLAC quotes and see a live feed of the best MYGA fixed rates in the country, and even get indexed and income rider quotes as well. You can also sign up for my 6 annuity owner's manual books, and I'll ship them for free and under no obligation. I also encourage you to schedule a one-on-one call with me, Stan the Annuity Man, so we can have a full discussion of your specific situation. It will be the best brutally factual and truthful advice you will ever get, and that's one guarantee you should definitely take advantage of. So join me next time for the #1 annuity podcast on the planet, Fun with Annuities.